Hello, everybody. A little bit early here. A couple things I want to cover this evening. As we go through our annual market review, this is my third year doing an annual market review. First time doing it in public. Um, Pretty excited to show you guys some things tonight. Some things that we've used that have been very beneficial to us, and more importantly, kind of where we're going from a U.S. markets perspective, from currency wise, all the way to stocks, crypto, gold, silver. We're going to cover cotton. There's a couple things we're going to cover tonight, and what I see playing out, why I see it playing out that way, and I'm actually going to show you what we look for in the markets as we're getting ready to make a decision to put a trade in. This past year, we've been really fortunate. Um, this past year, we were 864% positive in the market. Most portfolios were averaged down to about 35%. We were positive 864%. The year before that, just a little over 1140% on our primary account. So, past profits, of course, never indicate a future result. I'm not a financial consultant, I'm not a licensed financial advisor. So, make sure to consult with those professionals before you make any decisions moving forward. So, with all that being said, um, I'm going to kind of give people about 2 more minutes to hop on before we start getting into the charts and start breaking down um, some individual stuff. And then we're going to talk tonight a little bit about what drives the market. That's one of my favorite things to talk about. It's a little bit surprising. Most people think it's supply and demand. It's not. And I'm going to show you why it's not. Um, and then we're going to talk about the potential market collapse. What could be the potential signs of it? What you should be looking for in the market. Um, there are signs that it will come. The wealthy will prepare, and you can see how they prepare over and over and over again. If you guys want to as well, you can ask some questions in the chat, um, and I think I'll be able to see them. And let's see. Um, yeah, we're gonna talk about a lot of things. I'm pretty dang excited. Gonna talk about the digital dollar. I don't know if you guys seen the last, I believe it's the last 8 weeks. We've saw 7 countries so far, if I'm not mistaken, that have dove in, putting out a digital currency for testing. What is that going to do? What will that bring for the U.S. dollar being the cornerstone currency of the world? We're going to talk a little bit about that tonight. We're going to go for a little while. I'm just going to warn you in advance. There's a lot to cover, a lot to talk about, and a lot to get prepared for. And I want you guys to have an opportunity, if you choose to do so, and if you see what I see in the markets after showing you, I want you guys to be able to prepare for what we think 2023 is going to look like in the markets, and who knows, maybe turn yourself a profitable year and learn a thing or two from the markets tonight. So let's dive in. It's just after 7 o'clock. And so I'm sure some people will be joining us as we move along. But like I said, if you have questions, you should have access to the chat. This is my first time using the software for myself. So this is something that's fairly new to me. But nonetheless, let's dive right in. Let's start with the U.S. stock market, the Dow Jones, which is really, if there is such thing as a primary market in the United States, I'd say the Dow is probably the primary, followed by the Nasdaq and then the S&P. Some of the smaller markets to fall in behind, but let's start there. Let me share my screen really quick. Let's see. Share screen. Let's see. If someone could shoot a comment over and just let me know if you guys can see my screen. I've got another screen over here as well. I'm going to hop over and just make sure that we are seeing the screen. I know there's a slight delay between me and you guys. Yep, looks like you guys can see the screen just fine. So since that's the case, let's go ahead and move forward and we'll talk. So this is the, like I said, we're going to start in the Dow Jones. There's a couple things I want to show you about past history with the Dow Jones that kind of makes sense as to why it's doing what it's doing and where it could potentially go. This is the daily chart. We're going to go actually back down to the weekly chart. This is TradingView, just in case y'all are wondering what I'm using into my charting. But there's a couple things we need to take a look at. And first off, I want to start in the past. This is where we were, okay, to start the year in 22. So this is actually January the 3rd of 2022. We made an all-time high, okay, which was just above 36,000 on the Dow, okay. So I'm going to play. I haven't done any of this, by the way. This is all live. The only market I've even looked at is the NASDAQ. I did that a couple days ago, and it kind of verified everything that I thought that we have coming to us, but wanted to kind of throw this out there. We're going to, like I said, start with the Dow. So we made a high January 3rd of last year. We've been in a steady decline ever since then, right? So we've went back. Markets work on liquidity. You're going to hear me talk a lot about liquidity, and markets look at liquidity pools, and the algorithm that drives the market looks at liquidity pools to minimize the amount of people that are catching the bigger moves. And so a lot of people will jump out of fear. They see it moving against them. Retail traders especially will see the markets moving against them. I'm going to show you guys some live examples of what that looks like, and I'm even going to show you in the past what we're dealing with at this point. The market was seeking this liquidity void in this area here. As you can see, we dove into that and out of it. This was a high moving expectation coming out of the COVID downfall. This was the COVID downfall. This was not by accident, by the way. Like I said, I'm going to show you guys tonight exactly what we see in the markets and how we see it, and then how we can really utilize that. And then we're going to go back even further in the markets, and I'm going to show you these other big moves. This was 2008, if you guys remember the 07-08 collapse. And I'm going to explain to you why the market did what it did, and then why this repeats over and over and over again. And if we were truly working on supply and demand, like most retail traders think we are, you're going to quickly understand that's not the case. The markets are algorithmic. They move and they seek liquidity in the markets. So let's start with 08. I know we got some young people. 08, we had the big downfall. This is the 2007, 2008 market collapse here. But why did the market collapse? What was it seeking? What was it looking for? What was the of it doing it? Because in every market collapse, people get wealthy, and then they get wealthy on the rebound. And the retail traders are constantly maneuvered by fear. And so by using fear, quick moves, no matter what excuse it is in the market, whether it's 2000, we had the computers weren't going to roll over. We had the crash there. So there's always a reason the market is going to seek liquidity. So what is liquidity exactly? When long-term investors are buying into any basic stock or any, taking positions into the Dow for a gain or for a loss, or whether they're always taking the retail positions, right? So most of them trade breakouts. That's kind of probably one of the big things: breakouts, moving average crossovers, things like all that. That's what they're trading. So when the moving average is crossing over here, retail traders are jumping in because they're wanting to get into the markets and make the money. So here's what happens. Let me find an annotation tool. Let's see. Let's grab. I guess I can use the highlighter for this. But as the market is moving up, that's a bad color. Let's get us a better color than that. Okay. As the markets are moving upwards, retail traders are absolutely loving it, right? They're getting in because each one of these breakouts, they're able to get involved. Their stocks are moving up. Their portfolios are getting larger, and these things are happening. Okay. So I'm going to move that away for the time being. Delete and delete and delete. So here's what the market tends to do to people. It's always going to seek liquidity areas. Okay, so let me grab this back and let me move the market. So here's what happens. You have all these retail traders, and most retail traders use a stop loss, a trailing stop loss, which protects their investments, so to speak. The buy and hold, you don't see a lot of that. But they take a position here and then it breaks out again. They take another position here, it gains, takes another position here. Well, all of a sudden we get to a market top, right? And so then the market starts working back. People start getting in on shorts, right? Because they see the market running out. So what's happening here is this is moving back down and it needs to draw out liquidity from the buyers. It needs to push people out to balance itself from where the market was in the big push up. So they need to push some people out to push back up again. It's a hard concept to grasp, but when you start seeing what I'm going to show you, let me grab a ray. This was the top here, right? So let's grab this. That was the top. People are shorting the market. So I want you to take a pretend journey in your mind really quick to say this is the beginning of last year. Just throwing this out there. The beginning of last year, this was 2022. Market works its way down, makes a shift up, and then all of a sudden we break out. What happens? The retail traders are excited. We've come out of the downward market. We're going to move up. Boom. Price goes up and then makes a major liquidity sweep down to the bottom. All of this position here, all of these downward candles that you see, this is where retail traders look at this, that's where they're putting their trailing stops, right? So they're moving. So if they got in here, they're moving their trailing stop behind this, and then they moved up here, they're moving it here, and then it moved up to here, and they're protecting themselves, so to speak. So the way that they can bump people out, eliminate profits before a low is now that price has broke through this layer, the retail traders have now moved most likely to here because they see this now as a resistance point. When price comes down, notice how it bounces and it bounces again. So they're like, okay, the market's going to continue to go up. They're buying, right? Because they see this as a resistance point. Price is moving. That's not the way the algorithm sees it. It's looking at the amount of stop losses and stop orders that are down in this area here. This is a large liquidity pool. You have multiple. Look at this. You have 1, 2, 3, 4, 5. You have 6 strong zones. Now, this is the weekly chart. So this is a very, very large liquidity pool, right? So 2008 accidentally happens. Accidentally, right? Market falls apart. Here they come. They pull this money out of the market, this liquidity. People are in panic mode. By the time retailers really grasp what's going on, because if you remember back in 08, things happened so fast, right? By the time retail traders realize what's going on, they start shorting the market down here because they're like, oh my goodness, it's falling apart. It's falling apart. It's going to go down. So they're getting into sell positions or short positions here while losing trades that they've got in this area or this area on the breakout. Now they're starting to short the positions, right? So they come down, they sweep this liquidity zone out, and then what does price do? Price reverses back up. Before price makes a big move down, you're going to see a big move up. Before price makes a big move up, you're going to see a move down. They're going to sweep liquidity before they make larger moves. Sometimes they sweep liquidity more than once. Sometimes they sweep it more than twice, but you won't see them stay there long because their book orders that are following with the algorithm to continue to push the market, drive the market down, the book orders, they're having to get back balanced, right? So you see all this imbalance area that are in these zones here, right? So you see how quickly the market makes a recovery coming out of it. So remember, this is back between 2000, right? This is the 2000 fall, right? Coming out of 99, right? People are panicking because the computers aren't going to turn over. Market's not recovering. It really goes into a strong consolidation. What's going to happen? Here we are. All these things are happening, going through people's mind. Market fights back up. This is where people are excited. The market's pushing up, and then they drop everybody on their head right here. Okay. So this is the 2000 to 2008. This is one market cycle. This is another market cycle. Here is another market cycle, right? So here's the thing. Market cycles complete themselves. Okay. Once the market is swept, and it needs to be swept pretty significantly. This is a pretty strong significant, right? This no longer goes in the book of relative equal lows, right? So these lines right here, these candles that are shorted here, these right here, these are relatively close to the same area that are holding liquidity. The retail market looks at these as what? It looks looks like support, right? Price shouldn't go below there. It's already been there 6 times. It's not going to go below there. That's the way the retail mind, when people are starting to get traded, that's the way they think. So when they sweep this and then move price back out of that area, now they can make the bigger move up, right? But they needed to sweep that liquidity before and push the retail traders out. Okay. So keep this in mind, and it happens over and over again. If I take you back in time, same thing here. Hold on, let me zoom in here. We're going to get a little closer because we're going to go back a long time on the Dow and just let's see what happened. Look at this. This was the crash of 87. If you guys remember that, it happened really fast. But look at these relative equal lows. Price breaks out and goes up. What do? What do? They come back and they sweep these lows here. Well, I'm not a big trading view user, by the way, if you can't tell. But they sweep these lows. What happens? The market rolls on. But they had to sweep that liquidity out of those zones. If you go back here, you can see the same thing happen. They swept this zone, right? They swept this zone here. So they continue to sweep high. They sweep high. They sweep low. They sweep high. They sweep low, right? So that's why I'm telling you, you got to be really aware. Let's delete that and that while we're here. Okay. So you got to be really aware. So this was back in 87, the big sweep. Market pushes up. I'm going to go ahead and remove all these lines here while I'm here. And then you got the 2000 to 2008 deal where they come down in 2008 to sweep all of this. So now what we're in now, let's get to current day. Let's get to the current day and what's going on. You see what they did in 2000 and in 2020 with the COVID move. Why did they do this? Why did they do this? It had such a large push up. They needed to clear some books, but it wasn't in what we believe. It wasn't for the bigger move because what didn't they do, right? They had a short-term liquidity sweep here that pushed the market up. But notice how they pushed the market up and then they pulled it back down. But look what they left behind. This is the fear. They left this area of relative equal lows untouched. This is the real deal, folks. This is panic mode for the United States, by the way, when this happens. You're talking about cutting half of the wealth out of the middle class. Well, a little bit of wealth, the middle class. I'm going to delete these other lines down here from the previous years. But this is a very strong potential of where the markets could go. And we're going to talk a little bit in just a little while about potential when that could happen, what to be looking for in the markets when it does happen, how to be cognizant of the things that are being told to you that are fake, that are moving our minds around to allow the wealthy to continue to get wealthy and the middle class to stay the middle class or get poorer and go to a two-class system. But these relative equal lows are going to be a strong target. Okay. So we've now moved down into this sell side liquidity void, pushed back up out of it. So here we are. So this is the move for 2022. What do they need to do before they come down to the bigger move? They need to go up. They need to sweep some liquidity. Does that mean they need to go to an all-time high? Possibly. And when I show you all three of the major stock markets as we go through them over the next few minutes, you're going to go, uh-oh. Now you can start to see these things play out in advance. I've showed you 3 different points of history that the same thing has happened every time. We say history repeats itself. Why does no one look at this? It's simple. They use fear to drive us. And they continue to drive. They use the media to drive the fear narrative. But the wealthy and the professionals know when to get in, when to get out, when the market's pumping, when it's going to dump. They're preparing now for what we believe to be a very large move. So they made this push up out of COVID, right? They come down into this liquidity void, also an order block here, by the way. And we're going to go to a higher time frame to clear a little bit of this up as well here in just a second. This is the weekly. I mostly trade like the 5-minute chart, the 1-minute chart, by the way. But everything is built around this narrative. Another thing you need to understand, when they make these push ups before the push down, they're really quick. Look how this move was really fast. This wasn't like, oh, I'm consolidating just a little bit up. This was a pretty significant move up from here to here. A pretty significant move up. This was a pretty significant move up as well, starting this market cycle. So what could happen from here? All right, let's go to the monthly chart and see if we can get a little bit better look through the eyes of the monthly chart, right? Same thing. If you look at the monthly, how they swept the liquidity down here, going back in time, they swept the liquidity here, going back even further. We can go back over and over again. This is the way they play the game. This is the way they take money out of the middle class, right? So they had the push up, the large push down. Here you had a push down, but it did not cover the primary liquidity zone. So what's going on now? Where are we at as we open 2022? Okay, let's take a look. Now we're on the monthly chart. In my opinion, could they take a move up to an all-time high? Possibly. There are some zones. We've already cleared this liquidity void here. This has been cleared. Okay. This was a monthly and a weekly liquidity void. Here's the monthly version. We were on the weekly here. So here's the monthly. This has now been cleared. This needed to be cleared before they could make the big push down. Okay. Because there were inefficient orders here. They needed to be filled. They needed to fill these orders before a big push down. So there was a block of orders here. We call it order blocks. When it hit this area here, price obviously rejected, rebounded, and come back up. Now, what's happening? The media has been driving a fear narrative the entire bit of 2022. They can't beat retail traders every single time. If that was the case, nobody would play the game, right? So in 2022, I'll call it the educated retail trader, not the holder, but the educated retail trader, not your average 401k person, but your educated retail trader, have been shorting things, and they've made a little bit of money, right? Stock, your 401ks, your average just buy and hold or invest long term. Those people are down, 30%, 35% ish. But the retail traders have been able to make some money because the retail narrative have been fear, 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 inflation, inflation. They've been driving this massive narrative around it, right? So now what looks to be happening is they're going to push up to try to create a little bit of momentum here, right? Look at the last 2 months. If you go back in the news, they really were pushing a fear narrative in like August and September, right? Because, the markets have come down this far. They knew this, right? Because on the lower time frames, what they did is they did the reverse of this. They swept out the people that were in the short side, right? They opened up these sell orders of people that thought it was short if it goes lower. They are in the shorts, and now they're in massive drawdown or have lost trades, or they're in negative equity for sure from a short position here, because now the narrative is to drive up and grab the liquidity before the big push down. So this is the Dow. When we go to the NASDAQ and the S&P right here in just a minute, it's all going to line up. Every bit of it. You're going to start saying, oh my goodness, because it's almost when you see it, you can't unsee it. Okay. And I can go down and prove this to you from anything from a 30-second chart all the way up to the, the 6-month chart. Doesn't matter. The markets work the same. It's a revolving door. Okay. So what I see happening, what I think there's a large potential of doing is the first quarter, maybe even the first and second quarter. But the first quarter, I think we're going to continue to push up. I think here early in the quarter, we could sweep down a little bit and on some lower time frames here and then push up. Could we get to an all-time high? Maybe. But I think a super realistic expectation is somewhere in this zone here, because there's a good bit of liquidity on the time frames that are right below. Down to like the 4-hour and stuff. There's some good liquidity here. There's also a liquidity void on some lower time frames that I think they need to get back to. But this is the things you need to be looking for, right? And so as we go further, let's go down to the daily time frame and let's see what the daily time frame looks like. And then we can kind of bring it all together by going to the other markets and then kind of put the pieces together. So remember, I told you markets love to sweep the equal highs and equal lows, right? So on the daily chart, we have a set of relative equal highs here. We also have a liquidity void here. So could they take it to an all-time high? Yes. When am I starting to look to short the markets? When am I starting to look for the signs of things to happen? I'm starting to look somewhere around the 35,470 mark. I'm starting to look here to see if they're ready to make the bigger play, or will they push up? and we'll talk about confirmations and things like that as we move forward as well. I'm gonna go down to the lower time frames and show you what I look for when it comes to confirmations or turnarounds before big drops and things like that. But notice this liquidity push here when they dropped into that zone. So now we're on the daily. When they got into that zone, price pushed up really fast. And then they sucked price back down here just below this mark, right? Just below this mark to bust out the people that had caught this turnaround zone, right? They needed to bust those people out, and then they moved the market up. They bust out the retailers that were here to move back. Okay. So I hope you guys are following along. I am going to take questions, by the way. I have somebody sent me a message a second ago. Yes, I'm going to take questions here in just a little bit. So let's hop over now. Now that we know what we're looking for on the Dow, which is, I call it our cornerstone market here in America. Now let's go over and take a look at the NASDAQ, right? So this is the second largest market we have here in the States. And let's take a look at the weekly chart. So same thing, right? Going back into the 2008 crash, we just happened to go back. I'm sorry, we got to hit the first market. We got to hit the 2020, the COVID scare. We'll call it that. They just happened to go just beyond this area here and take out that liquidity. Just happened to take it beyond that area there on those equal lows. Just happened to. It's all by chance, but it was the virus. It was the virus, right? They make this big push down. They sweep out the liquidity. In 2018, when we had the little bit of market recession we had there, it just happened to sweep this little bit of liquidity, right? Going back here, but here's the fearful part. So same thing as the big market. What did they leave behind? So let's hop back out. We're going to go back out to the weekly chart, and we're going to show something pretty significant here that starts lining things up. We left this liquidity pool behind. The 2020 push was a prelude to what is coming, in my eyes, based on years and years and years and years of market cycle data that has repeated itself over and over again. They left this liquidity pool here. Okay, let's go over to the NASDAQ. Take a look at the liquidity pool here. Look at this relative equal area here, and just keep in mind where this is. This is down in the 3,600 range. This market was trading north of 15,000. So think about that. That is crazy, right? So they swept the liquidity here. They swept the liquidity here. We call them short-term liquidity sweeps. Happens all the time on the smaller time frames, which I'll be glad to show you guys also. But they left behind the primary liquidity pool that is holding. So going back into 08, what did they sweep in 2008? Same thing. Big push up, right? They come back down. Market's working because this is when tech stocks were booming right there at 98, 99. And then all of a sudden we had the 2000 scare, right? Boom, market comes down, kind of flattens itself out. So what did we have? You got it. We had liquidity built up in that area here. Hold on, got to get to it. We had liquidity built up in this area here. So they went down and swept it. Boom, boom, worked the market up, comes back, swept the inside lows here, and then price moved on up, right? They do it over and over and over and over and over again. What they haven't done is they haven't swept this primary liquidity pool here. They have not swept that. Also, we have a large imbalance area on a higher time frame that goes back into this zone here. I'm going to draw the chart on the weekly, and then we're going to go out and we'll look at it on the monthly as well. Let's go ahead and go to the monthly really quick, because now that you guys are, I hope, at least getting the gist of what I'm saying and how the markets function, why they function this way. It's all based on money. It's all based on fear. But you have these inefficient orders that haven't been filled in this zone here, right? And then, of course, just beyond it, you got it. You got that liquidity area that we were talking about right here. Those relative equal lows that could be swept in this process. And here's where we are now, right? And what did I tell you? Before every big move up, there's a move down. So before this move happened up, they went down first and they broke some liquidity out here. See this? So before Let me zoom in so you guys can see a little bit better. So price is consolidating here for 5 or 6 months. They move up. Retailers get excited. They're buying, they're buying, they're buying. They're putting their stop losses and stop orders here. They suck the price back down. They take the money from the market, and then they move price way up really quickly, right? Oh, we're going to get in on that too. Price moves up, all the excitement again. Okay, we're back in buy mode. Buy, 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 buy. And then they suck the market and they panic everybody. This was the COVID scare that comes down and just happened to sweep these relative equal lows that we continue to talk about, right? Market goes after relative equal lows and relative equal highs over and over and over and over again, because that's where the liquidity. Memorize the word liquidity. That's where the money is sitting, right? That's where the orders are sitting. They need to do these things. So they swept it. They haven't made a clean sweep down in a while. So, but before we can make the big move down, what do we need to do? We need to find some liquidity somewhere to sweep going up, right? What will they sweep going up? Well, as you can see, this is why I think we'll have a first quarter push. You got some relative equal highs here. You got some relative equal highs here. So from a NASDAQ perspective, I'm looking for price. Let's go back down. I want to go back down to the weekly really quick. Weekly here. I'm looking for price in the next couple of days, maybe the next 2 to 3 weeks, to sweep this area here. I know there's got to be an annotation tool inside. Let's see. Brush, highlighter. What does the brush do? I like that. Okay. So I'm looking for price to sweep here and do something like this. Okay. I even posted this the other day on Facebook. I posted a chart of what I think we could see happen. So if I see these lows get swept and I get confirmation of a turnaround, the first quarter is going to look pretty good. But what is the media going to be saying? The media is not going to be telling you the market's getting good. They don't want you to be buying. They're going to be talking about inflation. They're going to be ramming the fear down our throat, right? Because they know the bigger move is going to come, whether it comes from this zone or whether it comes from this zone. They know the bigger move is coming. So if they can fear, I think this move up is going to be pretty quick. When I say quick, I'm talking about a couple of months. That's quick on the kind of move I'm talking about this market potentially making. Because I don't see this happening as 2008. I see this happening more like 1929. I see it as a way for them to usher in digital currency. I see a debt forgiveness that's possibly coming as well. Here we go, because I'm going to be called a conspiracy theorist. I've been called that plenty of times in the past, but I'm showing you actual data. I'm showing you years of history to verify what I'm talking about, right? How do I get off this? Oh, I got to get back to here. So that's what I see in the NASDAQ. It also plays right into what we were talking about with this narrative. You got these relative equal highs up here that they could go back and sweep, or the stock market could make an all-time high. The stock market could very well make an all-time high. And when they start preaching, when you start seeing the media talking about how great the markets are and how the recovery is here, something's going to happen to trigger the market. It was COVID. We had the housing bubble collapse in 2007 and 8, along with, what was that, SARS-1 virus back then as well. 2000, you had the market crash because of the computers and the things rolling over into the new millennium. There's going to be some kind of celebration that we've come out, right? And then some big event's going to happen. It could, right? Because we've been socially conditioned for the last however long on this war with Russia and Ukraine, right? We could end up in a war, and that caused the markets to make a sporadic, really quick move. But if you're prepared for this, you're going to be able to really have an opportunity to see this coming. And there's people that have gotten filthy rich with very little money by being able to see what I'm showing you today. Because you got to get away from the retail narrative to understand, because most people are excited when the market's pumping, and then the media is telling you how good it is and how things are finally coming out, and you're going to have the White House telling you how wonderful things are and how they've turned it all around. But I'm telling you, stay on your toes, because the potential bigger move. So here, they could come in. We talked about that little sweep low. That was definitely the wrong tool. We talked about that little sweep low earlier from the NASDAQ over here, remember? So with this market, they've swept the lows already, right? They swept the lows here and then moved up big. So here, they could come back into this uh, um, imbalance area, balance the price range out, and then move up, right? And then you've got a potential turnarounds on here or from a new all-time high. These are going to be your potentials that you need to be watching for. You got to be on your toes when you start taking out these areas of liquidity. Go into the monthly chart. Let's go to the daily chart because then it gets really significant on the NASDAQ. Let's go to the daily chart on the NASDAQ. You can really see the relative equal highs here that I was referring to. I mean, it's a really, really, really obvious area that this is a strong, here are relative equal highs. Here you have relative equal highs. That's why these two potential zones will pull a lot of money out of the market from a liquidity perspective. Okay. So pay attention to these numbers. 13,700, be on your toes. Somewhere around 15,250, 15,300, somewhere in that neighborhood, be on your toes, right? You also have this small imbalance area here as well. It's already been tagged one time, but these are areas that I'm personally watching for a large market turnaround. So let's hop over to one more market really quick, and let's look at the S&P. What's the S&P telling us? What do we got? They all line up together. They may not trade exactly the same. One may have a positive day, negative day. You don't ever know. But in the grand scheme, in the big move, in the things that are happening, you got relative equal highs here. You got relative equal highs here. You've already had a price sweep here, right? So what could happen? You could see a push down, right? This is where the retail logic comes in. You could see it come down, make a double bottom, then move up. And then this is your pay attention zones, right? This is your pay attention zones. This is where you have to be paying attention. This is where something big can happen, right? So if you're an S&P trader, you're looking for the 4350 mark, somewhere in that neighborhood, 4330 mark, somewhere in there. And then you're also looking at the 4650 mark, somewhere in that neighborhood, should be where you need to have your ears perked up for something to happen. So from a U.S. markets perspective, they all line up. They're all showing us the same thing. What else do we have down here? You got it. We got this area of liquidity. Let's go get the real area. This is an area of liquidity right here, right? But I'm pretty sure if we go out further, we have this area of liquidity that is your biggest. This is the biggest move that would line up with the other markets, right? And we're talking about down to 1800 and we're trading. So we're talking about cutting 50 to 75% of off our markets in this potential down move that could come. What will be the trigger? Will it be war? Is Joe Biden the perfect fall guy? I mean, when you look back in history at the presidents and leadership in power and in place, are they printing all this money because they know what's coming and they're not concerned about it? There's a lot of questions that I have that build up in my mind, and some people call them conspiracy theories. They can call them whatever they want. I don't care. All I know is I know what the markets have done in the past over and over and over and over again. I know what the markets are telling me now, that it looks like they're about to repeat that process, and it looks like we're on the verge of it. Plus, we're being socially conditioned by the media about the Ukraine Russia thing. We're being socially conditioned about inflation and to make the American people okay with it. They have to do something drastic. So if you remember back in 2001, when we had the terrorist attacks, the markets crashed then. What did they do? They come back, and we had the Patriot Act, which legalized them to be able to spy on Americans for the first time legally. Something they have to socially condition us. They have to get us to a mode where we're accepting of it. If not, we really would raid them. We would be in D.C. with a real insurrection, not the January 6th thing. I mean, you can politically be whatever, but that's not a real insurrection. Real insurrection, there'd have been a lot of political people hurt. There's way more Americans as citizens than there are politicians. So they have to socially condition us to accept these things. So they've been socially conditioning us through the media on Russia, Ukraine, inflation, the digital dollar. The funny thing is, we just had this recent collapse of FTX. If you know anything about crypto, you had the recent collapse. This will be, by the way, there's going to be a lot of people there already have been. I was one of there's going to be a lot of people hurt there that lose a lot of money, and now they're going to be able to usher in regulations to whereas 70% of the crypto market before this happened would have went berserk and would have just absolutely not had it. That would have just caused a complete stir. But now they've socially conditioned with this move to where I would say probably 65 to 70% of crypto holders, users, or adopters, or people that are willing to adopt a digital currency, are now wanting regulation. They're wanting it to be controlled because they think regulation will prevent that from happening again. But it took a socially conditioning moment to move the market that way. I hope you guys understand what I'm saying, right? So they have to have an event. They have to have some trigger point to make us okay with it, to make these kind of moves in the market. But you now have to keep your ears up and have to stay on your toes because you know where they need to go to pull liquidity out of the market, which is the cornerstone, by the way, of their wealth. Now you can get on their side and move with them when you start to see these things. Okay. So I've went through 3 really, really long charts, all of them, the markets here in the US. I've went through 3 of them. All of them line up the same. They're all saying the same thing. They all tell us a story. So now what do we need to look for this to happen? What should you be looking for? Well, number one, we're going to look for liquidity to be taken. That's why I've given you the levels tonight on this. I've given you the levels to look for of where I'm going to be personally looking for a potential turnaround to where I think they need to pull liquidity out of the market before the bigger move down. That is, let's cover them really quick again. That is the 40 or the on the Dow. We're looking somewhere between the 35 470 range, just call it 35 500, somewhere in that neighborhood, or could potentially make a new all-time high at the 37,000 mark. One of those 2 spots is where I'm going to be looking for a potential turnaround for them to pull liquidity before the bigger move down happens. Okay. On the NASDAQ, I'm looking at the 13,725 range, somewhere just north of there. There's also some really nice daily and 4-hour equal highs around 14.2, right? So this area here, and then we could push up as high as 15,225, 230. Okay, so these are the areas I'm looking for on the NASDAQ, and they'll all work together. They're going to be working simultaneously to get to these areas, by the way. And then you got 43,000-ish, just north of 43,000 on the S&P. Or potentially up to like the 4650 mark on the S&P. Those are the areas that are really look like they're coinciding to work together as far as taking liquidity before the bigger move down is going to come. Now, when's it going to come? If you look at traditional market crashes or potential downturns, most of them start at towards the end of Q1, beginning of Q2. So that would put my radar really strong somewhere between March and May. If I had to call it, I would say March 13th, May 13th. They're probably 2 dates that I would look at. And it could roll into early summer. It's what's going to have us distracted or what's going to be the trigger cause of it. So if you start to see the media talking about some form of fear that's going to be like a major world style impact, just start looking at these zones and you'll start seeing those things correlate a little bit. Okay. So I want to go take a look really quick at gold. So look at the gold dollar. It's been, look at there. I had this drawn for price to move up from this zone. This was something that I had drawn, and actually, I believe I made this trade. Oh, that's not supposed to happen. Let's go back here. Right. So I had drawn this imbalance zone for price to come back into this zone, and then price to push up, and this is where I had my target at. Look how price respected that. Forgot I took this trade. It's been back in October that I took this trade. And yeah, that was it. That's pretty cool. That's still there. Didn't even think about it. Um, so let's talk about gold, silver. Then we're going to move on into crypto, because I think crypto is going to be something that you'll see a little bit moving forward, because I think we're about to have an opposite effect, which has been rare. But let's look at gold from a perspective. Let's go look at something long term, like the daily or monthly. First off, what do we talk about? We talk about relative equal highs. Look right here. That's not supposed to happen. Yep. Let's look at these relative equal highs right here. Those look mighty juicy. What does that correlate with right now? All jokes aside, what has just happened in this market? Look what they just did. Look at the area they just took out. Look at this liquidity zone. Every retail trader is looking at this as what? Support, 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 support. Price isn't going to go below there. Price isn't going to go below there. So when price is going down, going down, going down, they're thinking, oh, I'm going to buy right here. I'm going to buy this turnaround. It's not going to go below there. And then they slam it down through to take out what? All that money, all that liquidity that's sitting inside that zone right there, right? But take a look at where I believe we're going, right? I think long term throughout 2023, I think gold's going to have a pretty good year. We cleared this liquidity zone. If you go back in history, we can do the same exact thing that we did. There's a move here, right? See this area right here does have me fearful, to say the least. This area right here has me fearful. This area of liquidity has me thinking for sure, because it has not been taken. Those equal lows are awful, awful juicy. What could happen is you could see gold go up into the 2000 mark, and then what's going to happen is there's going to be a massive buy on gold, thinking it's people have been talking about gold going to 3,500, 3,800, 4,000 for years, right? This could be the mark where they come up, make that big push up with the market, by the way, because if you look at gold over the last year, what happened, right? January, we were here, they made a push up, but they didn't pull liquidity out. And then overall, gold had a negative year, just like the markets did. Gold had a negative year, just like the markets did. So if we get that push up with the stock markets here quick, I would say I'm short-term bullish on gold, right? Possibly to come take out this zone here, and then a bigger move down to take out the lower zone here, right? Same exact concepts that we just talked about, from the S&P to the NASDAQ, all the way over to the Dow, right? It's the same concept that all the markets move the same. All the markets seek liquidity. People think that the markets operate on supply and demand. That's not how it works. Because if that was the case, if it was supply and demand based, the market wouldn't move exactly the same every single time. And when I go to the lower time frames and I start showing you that the exact same things happen on lower time frames, it's just at a different time frame. And it all works within a bigger cycle. Okay. So we think gold, I'd say a good here early, we could have a push down into this imbalance zone. So what I think on gold could happen during Q1 is something like this, right? And then once we get here, all bets are off, and it could be that big move down, targeting this zone here. So that's my thoughts on gold. Let's go to silver. What have we just done? You got it. Swept this mass liquidity pool here of the relative equal lows, everybody thinking it was a support zone. We also went into a large order block area, which is really intriguing to me. But one thing we don't have here that is even more intriguing is we don't have that big liquidity pool got swept already here. Take a look at this. Take a look at that. I buy and hold silver, by the way. I really like silver long term. But look, they swept liquidity here before a big move up. They moved down before they make the big move up. Guess what they did here? They had to move up before the bigger move down, right? They got to create the momentum in the opposite direction. And price just happened to come down and sweep this liquidity here off of this area, right? Price consolidates, consolidates, consolidates. Before they make the big move up, they have to what? That's right. They have to move down. Down play. Guess what? That's the COVID move. Swept the liquidity from this zone here that had been built up, built up, built up, swept it, moved up, make the bigger move. Here, You can see. Um, so with silver, possibly the same daily and see if there's anything. Yep. I already see something that's, pretty intriguing to me, because before they make the big move up, they need to make a big move down. So from a short-term perspective on silver, everything kind of lines up the same way. They come in, they sweep that zone there, and then they could move up from there. Okay, let's go out to the month and just make sure that we're not missing something substantial here. Let's grab the right tool. Yep, good liquidity sweep here. Good liquidity sweep here. Well, there is some liquidity there. Looks like they just swept it barely with this though. So I don't know. Silver could be a pretty good play here. I think it'll still come back down with gold. The markets are going to ideally move the same in most scenarios, unless there's some medical breakthrough, cell phone breakthrough. Silver's used a lot in a lot of those things. But this could be the play for silver. They could also go down and sweep this 1742 mark right here before they make the bigger play up. That would not even surprise me in the least little bit either. And we're going to talk about what I use as confirmation here in just a little bit as well. Let's go take a look at Bitcoin. Grab BTCUSD and take a look at that. Oh, so here's where I have removed nothing. If you look back on my Facebook page, by the way, my chart has not been changed. Look, I was even drawing where the liquidity and the money was, right? I was drawing this money area here. This is when Bitcoin was first in the 60,000 range. I told everybody, I was like, no, look, I said, this thing's coming down and it's coming down to 12,000. And I got called crazy. And look, I for a long time liked the idea of digital currencies until I've really thought that through. If you think about digital currencies that are regulated, any kind of CBDC that's coming from the government, they can put that on a ledger. They can turn your money off. They're going to track everything. I mean, it's going to be wild, the opportunities they're going to have. But look at what I said on Bitcoin. When Bitcoin was here, right? When Bitcoin was here, I said it needed to come sweep this area. It did, right? They come down. Guess what? Swept that area, left this equal low area here. But even further back is where we're at now. There was liquidity, and then there's this major liquidity zone right here that I have targeted. That's why I have this, I think 11,000, right about it, have a line drawn to it here. Those zones anywhere from 9,600 to about 12,000 is where I'll be looking, because I trade from zones. But this is the way I drew it out. I don't know if there's any way I could look at the dates I put on this on here, but this is actually how I drew it. I said it was going to come down, move up, which it did. Come down, move up. I said it was going to make a big move down and go up. Look at here. It does exactly that. Make a big move down, which it does, move back up. Make a move down, move back up. And I think it's going to come long term. I thought we would have come here quicker, but they have kind of moved it down. So it wasn't a perfect draw. But I'd say that's pretty dang accurate. And I drew this, back in, I don't know, 2021. Yeah. I called this in 2020. I called this in 2021. And I guess I never removed my annotations. But I said it would come down to, I even got it marked. It'd come down to 50,000 ish, which it comes down to 52 right here and stops. Then it would come to 42 ish. It comes to 42,256. Then I said it would come to 30,000 ish. It comes to 32,000, right? This is years, right? Same thing with Bitcoin. If you go back into the older charts, it does the same thing. They liquidity sweep here. That's what they did. Big move down before the move up. It's all the same. We can say that the government isn't behind this or didn't do anything with it or whatever. I think this is what got us comfortable with talking about digital currency. This was the beginning of the social conditioning behind, digital currencies work. Look at the technology. Look at the blockchain starting to get people socially comfortable with utilizing digital currency, right? I think Bitcoin was that. I didn't think that for a long time. I never really understood the power behind social conditioning until I've gotten a little bit older in age. I bought Bitcoin for the first time at $12, 2012. I still have the receipts in my email. So, I mean, but this is drawn. This is what happens. Now we've got down here, we've slowed down a bit, right? But there was this mass liquidity that goes down into this area. So what could happen with Bitcoin? Let's go in and take a look. Let's see what we got going on, right? You got these relatively equal lows here. Something you better pay attention to, because what do they need to do before they move up? They need to move down. They need a big move down to sweep, and then they need to move up. So what could we see in Bitcoin? I think early this quarter, we could see exactly that. We could see a sweep down, then a sweep up. So that's something to keep an eye on Bitcoin. But remember, before the big move up, we need to see a big move down. Is Bitcoin going to be here 10 years from now, 20? I don't know. I get asked that all the time. Should I buy? Should I hold? I trade. I'm not, and with the coming Bitcoin, I know where I'm going to buy it at. I know where I'm going to hold it to. I'll get out of certain percentages as that turns into profit. So I will buy hold, but I'm not going to buy and hold forever. Right. So, that's the possibilities of Bitcoin. I know I had somebody message me and ask about Doge today as well. I don't follow a lot of the smaller coins. They trade exactly the same, by the way. There's nothing different about it. Let's grab the chart and we'll kind of quickly hit the Doge deal. Notice Coinbase got in a little late, so that's probably a bad chart to look at. Let's go look at maybe market cap's got a better one. Yeah, here we go. Okay. Yeah. So same thing. We got this liquidity void here. Not liquidity void. I'm sorry. We got this imbalance here. We got this liquidity area that's just hanging out back here that has not been taken yet. So it kind of lines up with what we've been talking about a Bitcoin, right? They need to make another push down before they push up. Same thing. So will it last forever? I don't know. But this looks pretty juicy to me. That would look pretty juicy as a target area once we get confirmation down here from this zone of a possible turnaround to go up. So if you're in a Doge above 46 cents, when the moment is right, try to buy and offset some of that and, hop back in it and try to ride it back up and, take some profits when you get back. If you got in Doge at 70 or whatever it got to, what did it get to? 70, 80? My God. I got a 96. Holy cray. Wow. But yes, so that's what I would look for as far as Doge goes. I was asked specifically to look at cotton as well. So let's take a look at cotton. If you guys don't know, I come from a cotton farming family. I normally look at CT. Where is it? Let's type it out. CT. There it is. Okay. So here's our cotton. You notice there's a reason I keep an eye on cotton. These are the things that we needed. We had a very good confirmation here that showed that we're in a potential turnaround zone. Always before the beginning of the year, between like the holiday area. This is the daily chart. All of it. This is just normal. That kind of commodities fall really slow towards the end of the year. But let's go take a look at the weekly chart. I think it tells a pretty strong story. Same thing. The cotton market really fell apart starting in May, June. Boom, market comes down. Guess what? It swept this liquidity. Instead of making the big turnaround and going back, I call it double dipping. They double dipped, right? Down into, this is, if I remember right, this is a monthly order block. That's the reason I had this green arrow. I had all this, by the way, before it happened. Text messages between my brother and I going back. I don't know. It's been a while. Let's see. My brother runs the cotton farm, for those of you that know me a little bit. I'll see, when I started sending him charts, he was asking about it. So this is on November the 3rd. I don't know if you guys can see that. November 3rd. All those annotations were already on my chart. Right? So same thing here. We needed a big push up. We need to break this first blue line, we need to break and close up here. I really don't have any fear that it won't happen. Look at the amount of liquidity that is sitting above this zone. Um, I think I even spell out this is where we are. This is what I think could happen in my annotations. Let's go to the monthly chart as well. There is a fear here as well. But look, liquidity has already been swept here on the low side. I do remember this when cotton got down in the 40s because farmers have a call on their contract. And if it gets below a certain amount, the bank can come in and take your cotton, seriously. And it got within like 5 cents of that at that point. But this is, they swept the liquidity. They're doing exactly what they should do. Instead of catching the turnaround, they come down, they double dip. Now they're kind of moving back up. So we'll see if they come back into this daily / weekly / monthly gap up here. They could come back as high as that. I would honestly think that probably the 50 fib, for those of you that know what a Fibonacci is, where is the fib on here? Fibonacci, there we go. Yep, so that would be about right. So the 50 fib is this green line here. So yeah, you could see it go to the 50 or the 61. I have that upside down, by the way. It's kind of hard to see on that color chart too. But let's go here to here on the fib. And this is the 50 fib. This is the 61. So that'd be about right. Going back into that gap, and it should see a strong push down from there. So cotton could, if we can get this break of the daily structure back here sometime in January, we should start to see a push back up on cotton as well. Is there anybody that wants to see a specific stock? Because I think stocks are going to have an interesting ride. I've actually put out some exact numbers on your top 3 banks, a couple of insurance companies, things like that. If anybody wants to see a specific stock, put it in the chat. And I will pull it up and we will go over that if you want to. Let's see. What else do we have on the list here? We've talked about liquidity. We've talked about imbalances. We've talked about media manipulation. We've talked about another thing you need to think about. Keep your eyes on China. There's a pretty big discrepancy over Taiwan. Keep that in mind too, because they're the number one behind all of our money or all of our loans and things. So keep an eye on that as well. It could be that potential social conditioning. We've been conditioned China. They manipulate their currency, blah, blah, blah. We've heard all that for 25 to 30 years, or I guess all of my life that I can remember. China's bad, China's bad, China's bad, China's bad. So keep an eye on that as well. Definitely keep an eye on the digital dollar and the CBDCs that are being released. And keep an eye on the media. I haven't looked at much media. I don't look at the news, but let's see what's going on in the media and see if they're kind of telling us, because right now they should be driving a pretty good fear story. Finance, and let's go to news and let's just see what they're talking about in the news, and let's see if there's anything specific that would be a fear structure behind the reason you'd want to stay out of the market, so to speak, while they push it up. Let's see if there's anything in here that kind of pops out. Yep, there you go. Update. Global economy faces tougher year in 2023, right? So this is from somebody that's supposed to be an expert, IMF. So they keep you out of the market right now. They want to keep you out. Tough year. Got 2 articles on that. Article 1, Article 2. Here's another one. Tough year ahead for global economy. Yep, the narrative is being played out in the media as well. I hope they don't come after me over this. They just arrested Andrew Tate last week, which is, there you go. Market misery. They use these kind of words, right, to drive the fear. Market misery. Jobs report likely to show a still tight labor market going into the new year. Pretty crazy. Pretty crazy. And so I think you'll start to see some positivity coming from the media when things are right before things really get rough. It's not going to happen overnight. They're going to talk about it for a couple of days. They have to be right short term, right? Because if they're wrong every time, which they're wrong a lot, but if they're wrong every time, no one would ever listen to them. So they have to be right some, and retail traders have to win some. So I was just curious. Y'all can pick a news source and probably find um, let's see, market economics. Let's see what we got. Economics. Um, let's see. World economy is headed for a recession in 2023. Right? Fear, fear, fear. They want you to see fear while they're driving the market back up to make this bigger move before the big imminent fall takes place. So pay attention to those kind of things. Um, and let's take a look at. Let's see. Oh, let's go look at some lower time frame stuff. Let's go take a look at the Dow Jones. Uh, so let's go down to even say the 15-minute chart, and let's reset the chart. Okay, and December's price action always bad. Banks around the world, holidays, volume is low, things like that. But still, the same premises is going to apply. So let's just take a look at some things. Let me back out right here, and let me show you how the market is operating. Take a look at these relative equal lows between these zones here. They make a big push up. What do? When they make the push up, they need to take out what? They need to open up the stop zone here, which they do. They hit the stop zone, price reverses, comes back down, takes this area out. Okay, let's take a look again. Here you go. Here's another one. Right? This area here is looked at as support. Market comes down, then they push it back up after they take out these equal highs and lows. Um, and so you kind of get my point, right? So no matter what chart, this is the 15-minute chart. Hell, we can go down to the 1-minute chart, and I can show you the same thing, right? Anytime you get these relative equal highs on the 1 minute, that is where price tends to gravitate towards those areas pretty significantly, right? This these lows right here, market made a push up, boom, comes back down, takes this low out, moves up even higher. But then you have relative equal lows that are left over, which they come down and take out. Um, some of these zones are just it gets pretty crazy about how, like, okay, here's an example. This zone here, right? So this zone is right for the picking. That zone is right for the picking at some point. But they did just take that out, by the way. But they didn't take it out by much, which leaves it relatively equal. But that's actually where the price was. So they broke through just to bust out those stop orders right there, and then move price back on up. You do have some liquidity voids here, but you know what to look for in the market now. If nothing else tonight, I know several of you have stuck with me this entire time. You know what to look for. You know that these areas of equal highs and lows, price tends to gravitate. So, real quick, let's talk about what I look for. I'm going to unveil it all. Okay. Amazingly, by the way, isn't this amazing how they just took that area just by chance, just because of supply and demand? They went down into this stop zone and then pushed price up, headed back towards this. Now, price isn't going to just shoot straight up there, right? You got this area here that's going to be pretty important. So, price is going to come back down, work back down, and then move back up, right? That's the most likely scenario to come. It's not just going to, price doesn't move vertical and price doesn't move horizontal. I mean, vertical high or vertical low very often. It doesn't move that way very often. Um, price, most of the time, let's see if I can select this thing. Most of the time, price moves like this, right? Up and down, up and down, up and down. The vertical moves like this are most of the time driven by news. Yes, it's some kind of news driver when things happen. Something happens that is an excuse for the algorithm to move price really quickly um, against traders. And most of the time, you'll see it move into those inefficient areas or into the liquidity areas. I forgot I can use my delete button to make this quicker. Okay. So same thing on the lower time frames. This is the way it happens. So let's talk about what I look for from a trading perspective. Um, really quick, let's pull up my screen here and let's open us a fresh. So this is MetaTrader. So this is actually what I trade from. Let's open a new chart on gold. Or no, let's since we're looking at the indices, let's open up the indices. Okay. So what do I look for from a perspective of trading? What is my thoughts on an entry pattern? Where do I like to get in a trade at? Okay. So the first thing I'm going to be looking for, and you can look for these things if you want to. I can trade the charts naked, but if I show you um, using an indicator, these are not available, by the way. These are my custom that we've built. I'm going to turn those off. I'm going to make these X's a little bigger. I'm going to go 2 and I'm going to go 1. And this is a custom built indicator, like I said, so you can't find it. Notice that these specific X's, when they're broken really quickly or they are created after taking a liquidity zone, notice how price scurries back the other direction. So I'm going to draw a couple zones here. There's one. Here's one that took liquidity from here and created one. Here's one that took liquidity from here. Here's one that took liquidity from here. And this one, let's see. I may have took liquidity there. I'll have to get on the lower time frame to be able to really take a look at that. Okay. But what am I looking for? So this is a couple of days worth of trades. Okay. And this is these X's, we'll call them the magic X's, since they really are my magic formula. This is not available. This is something that I've built myself. But notice what happens when these actions happen really quickly, right? So I'm not talking about an X that gets broken from way over here. I'm talking about it happens quickly, right? So they're drawing liquidity out of the market. See, this one didn't happen quickly. See this? This X gets broken, but it's not like a swift move where they've swept immediate liquidity. So that's something for you to take account of, right? So yes, it makes a move back up. They come back to, and this is about to blow people's heads in half. But looking at the move, they come back to the 50 fib. You heard me talk about that earlier, right? So they come back to the 50 fib to balance out the area, and then they move price on down. But that's not the kind of move that I'm looking to trade, not from that perspective. It works, don't get me wrong, because if you know that they're going to work through the optimal trade entry, which is the 61 fib, or if they're going to go back to balance the area, the 50 fib, you can look in those zones on the lower time frames for the moves to really begin to happen. Here's another one that gets taken out quickly, but you'll notice that we don't have confirmation of the move down. And then here as well. So I'll show you a little bit of the good and I'll show you a little bit of the bad and how the bad doesn't confirm that the move, because we're not just looking for this to happen, we're looking for the move to confirm. Like we talked about earlier, those things that I talked about are high probabilities of happening, need to be confirmed that the reversal is going to happen out of those zones. That's why I gave zones for you guys to look at moving forward. I told you how the media should be reacting during the times that we're going to be looking for those moves. And you can, you can have yourself a short field day on especially certain stocks. If you like the options market, you can have a field day for probably a pretty good while. I think we're going to be in a 2 to 3 year area. But let's take a look at some of these entries really quick. So let's go down to the 1 minute. These are our zones that we're looking that we've broken, right? So this is where the zone was broken. I'm looking for a structure to be created and then an inefficient balance of price to happen. So here we get a large push up, but price wasn't ready. We haven't broken any kind of structure, so to speak, right? So really the first structure we have that creates is here. And then we have a structure that is created here that gives us a pretty solid structure that we want to break out of. But we want to break out when retailers don't expect it to break out, right? Because retailers here are selling, remember, because we've just broken through into the stop area, which is opening up sell stop orders and hitting stop losses of retail traders as well. So they're still taking their positions, so to speak, and we want to confirm that the move is about to happen. Okay. So I'm going to kind of zoom in here. What I'm looking for is I'm looking for a break in structure with an imbalanced zone in between it, right? So here we had a good bit of balance, but we haven't broken what would have been the primary structure, which would have been up here. So we have a structure created here, then we have some structure that's created here. So I'm going to say, matter of fact, I think I took this trade the other day, but here we have imbalance that has been created. We have a pretty solid structure from a push down that took liquidity, by the way, took liquidity from here. Price is now pushed up beyond, and this wouldn't be my primary entry. And let me tell you why. I want to see this most recent move. I do not want one of these X's in here. Okay. So let's add standard basic Bill Williams fractals to the chart. Right? So you have this consolidated area and then you have the explosion. But in this break of structure, we have between the low and the break, we have this consolidated mess. So this really isn't a momentum move. But when we create this new low and we've now taken liquidity from here and we've broken this new structure and created a new high, that's when I'm getting in at the 50 fib. Actually, on the 1 minute, I'm getting on the 61 fib. That's where I get in on the 1. So right there. And that is my entry point for that trade. Very small risk with a ton of gain, ton of potential gain behind it. Right? And this is over and over and over again. So let's go back and let's look at another one of these moves that will confirm itself. Okay. So here, let's get it right. Let's take it to where the actual high was. Here we have a pretty dang quick move. Yep. So we have a break in structure. What we have here is we have an area that was below that gave us that price action, right? That little area that created that consolidation after the price, right before the price breaks. We have this area of imbalance. I'll throw my fib on the chart. And then I'm going to get in the trade at the optimal trade entry, which is the 61 fib. I'm giving you guys exactly how I trade the markets. Like, this is one of the primary strategies that I use. 3. This is probably the cornerstone of trading. And I mean, I'm showing you how to just obliterate markets right now. Okay. So there's that one. So let's go to one that doesn't confirm the trade. Here, same thing. I would not have taken this specific trade on this time frame. I would have also looked at it on the 2 minute and the 3 minute chart as well. But we have too much consolidation without that last little bit of move taking some of the liquidity. We took liquidity of the short trade, but we didn't get like a momentous move right off of it. Now, same thing happens here. If I would have taken the trade, that is where I would have taken it, but it's just not my setup. It's not something that's not prime time, even though you can see that it did confirm and did move on away. Here, same thing. We're looking for that, momentum move here. Okay, this is pretty solid. I don't see a trade here that really tickles my fancy for sure. We don't have any imbalance area here. We break through price here. We break through price. We go up. We got a big push up, then another big push up. And once again, we don't get a big, large momentum push down on this time frame. We get a breakout here, but it's just not the momentum move that I'm looking for. Now this takes liquidity and we get a pretty good move down. So this would have been a potential entry, but I like being the high or low. But if I was going to trade this, which I would not, I guess it just happens to be coincidence that it comes back to the optimal trade entry. That's why we call the 61 fib the optimal trade. That comes from Michael Huddleston, by the way, in case y'all are ever wondering. He's a probably the most well-known trader on the internet. He calls it the optimal trade entry. Here, you get just get a beautiful reaction, um, but there's no chance to get in this trade. That's the real problem. What happens in this scenario, I think it's really good to look at. We do break, some market structure here. We have a tremendous amount of momentum. It just ironically, by the way, price comes back to the optimal trade entry and then rejects. I would not have gotten in this trade. Here's the reason why. Might as well walk you guys through that as well. Um, we already took this area of liquidity at the same time. Okay. So with this move down, we took even the secondary liquidity from here before price comes back and fills my trade. So I would not have gotten in this trade. I still could have got a nice little 1 to 2 if I'd have wanted it right here, but it's just not. I want the order to fill pretty quickly. I don't want it. I don't want price to rally down, take liquidity, and then come back to me, taking the other side of liquidity. And when you see price move really far away and then come back on the lower time frames, especially the lower time frames, the higher time frames you can kind of let roll out because the zones or the entries become stronger. But on lower time frames, this is not a trade I would have taken. But here also you have a break-in structure coming down. Price moves up. This is a news event. You can tell by the price action right here, by the way. This is a news driving event that happens. And what they did is they swept liquidity on both sides. They sweep here. And so this wouldn't have been, I would not have been in either one of these trades. But I can show you how to trade news if that tickles people's fancy, I guess. All right, here's a pretty good one, but you really don't have that momentum push. Once again, you have these fractals that are formed without breaking a market structure. Price pushes up again. You get a pretty good push down, but you really don't break. The first little bit of market structure would have been here you wanted to break. This comes up and pulls some liquidity out, but here you don't really get it. When you finally get the momentum push from here, you still have these fractals. So this wouldn't have been a trade that I would have been interested in getting in, but you can still see the move still happened. And then of course it happens and goes way down. That's not a move that fits the way I look to trade. Here is so here's a move that would have been a potential sell that doesn't work out. I don't win every trade. I'm glad to tell you that. I would have absolutely been in this trade. I would have absolutely lost this trade because we get a nice momentum push right here. I mean, a really nice momentum push. And I would have set it at the optimal trade entry and I would have lost, period, point blank, because I had a confirming entry come down. And what they did is they pushed up one more time and then made the bigger move down is what they did, by the way. So that happened. That double dipping. I was actually talking about it earlier. Okay, so let's go look at another one here. Yep, this would have been a really nice trade. We get the big push up to pull that little bit of liquidity out of the market. And we come back, but we don't fill my order. So I would have canceled this order. I would have had a pending order that did not get filled here, by the way, because my pushback looks like it came to the 50 fib. It didn't come to the 61 in this particular case. Came right back to the 50. Just happened to come back to the 50 and get back to equilibrium. But I would have canceled. I wouldn't have been in or out of that trade. This price here. Let's see, we make a low, but we don't break the high. Looking for that momentum push here. Don't break the high. Here we have just a bit of consolidation here. It's because of really the time of day it is. So this is at the London Open, by the way. So the London opens at 7 a.m. GMT time. So does anybody have anything they want me to look at specifically? I mean, I've walked you through like my primary trading strategy here and kind of given you the nuts and bolts of it for sure. And then of course, I've built an indicator that kind of does everything for me and trades for me. That does a lot of my stuff, and it auto cancels order. It's got complete artificial intelligence. It thinks just like I look at the market. It's taken me 4 years to develop it. We continue to make better and better progress on it. But hi, I see a hi over here. Hi, how are you? Does anybody want me to look at a specific chart for them? a specific stock, a specific coin, anything before we sign off? Because I said I was going to go about an hour and a half. That's about 5 more minutes. Or does anybody have any specific questions? I'll be happy to answer those as well, if you guys have anything. And I ask that if this brought value or you see value in this, please tell me, because I will do these more and more if people are getting value from it. So send me a message. You don't have to say it in public. Send me a message or whatever. I'd be super appreciative. I like hearing those kind of things. So all right, going up. There we go. No problem. Euro AUD. Yeah, I'll be glad to check Euro AUD. Let's go over and take a look at the Euro AUD. The Euro Aussie. Yep, same general thing here. Um, Same general thing. You had this area of liquidity that they swept, price swept. This is on the 1 hour time frame. 4 hour also, you can see that area of liquidity, and if you go to lower time frames, I'm sure you can still continue to see it. Oh yeah, right there. Um, so let's look at where we could see the Euro Aussie going. I know we've been in a strong uptrend with the euro for quite some time. Um, we had that. Let's throw so we have something to look at here. Let's throw on this guy here. Yep. So they make the big push up, then they double dip. Pretty common on large time frame moves that they make this little double fakey kind of thing. They come down, they bust price out, they move price up. You can see the momentum was definitely in favor, and then they kind of manipulate price back down, clipping that wing one more time before they make the bigger push up, right? So now what they've left behind, though, if you take a look, they've left behind this relative equal low area here that looks like could be right for the picking. We've had a really nice push up, a nice momentum grab here. I wish I had an annotation tool. And I don't think they have one in this particular software that I'm using. But you can see here, you just have to watch my mouse. We've got a nice momentum push back down, coming off of a broken area here. Price came back, filled that optimal trade entry position that we talk about, right? And this is without even changing time frames. Fills that nice entry here. So now what are we looking like? We're looking like we're going to work back down into this area here. Let's see. Most likely it can come down to about right in this area here. Oh, we had this happen today. You can't even see this candle hardly. So we had this big push down today. The market opened up with a gap, it looks like, and then they pushed down right here in the first hour of the market open, or the first 4 hour of the market open, I should say. Now they're pushing back up a little bit. So what they've done now is if you go back out to the weekly, they've most likely hit the weekly order block, but you got some relative equal highs up there. Let's go to the daily. Yep, that's what they've done. They hit the daily order block here, and you see price rejecting that area. So I wouldn't say, I would honestly look at it and say right now that you most likely will see a push up first. I think that they've left this area here is kind of right for the picking. Something to definitely keep an eye on. The price action headed that direction, and then of course this area here is something to look at going down. They could sweep this area before moving up, or if they go up and sweep this area, expect them to sweep it and come back to this zone. Those are definitely some things to keep an eye on Euro AUD. So higher time frame stuff, definitely keep an eye on, because these zones that have multiple liquidity points on them like this, or multiple points on them that cause a liquidity area, I should say, price tends to navigate to those. On the higher time frame, you don't know whether that's going to be a quick pump down to get them before they move up, or whether they'll move up to this zone, which has been there longer, and then move back down to this area. So they could sweep price both ways, in other words. So you got a lot of things working right now for the euro. I think long term, the dollar is going to kind of fight back pretty hard, which is going to hurt the euro. And if we start looking at CBDCs that have successful rollouts with their digital currencies, I think that's really going to affect the currency market. Um, who knows? You may even see the currency market flipped up on the side of its head in the next 3 to 5 years. Who knows? But definitely something to keep an eye on. Anything else for anybody else? We're at 1.5 hours now. All right. I appreciate you guys coming out and spending some time with me. And we'll see you guys soon. And you guys have a blessed day. I'm glad that you guys came out this evening. Have a good day.